dropping as low as what home values were pre-pandemic, I think is not going to happen. Right before this podcast, I got off the phone with Scott. The tides are changing. Yes, and it was a very interesting conversation that I had with Scott because he was mentioning, I was telling him about these, potential properties that I was going after, when I was in vacation and, I was kind of in negotiations of it, in the middle of the, vacation that I was in. And he had mentioned that he's getting hit up a significant amount from investors now. And he feels that the rate shock is done and over with, like what I've been telling everybody from the fucking start. That glimmer of hope or that glimmer of stability in the market where people are like, okay, I've digested that rates are no longer going to be 2%. They're going to be 6%. And even if they go from, when they went from 2 to 4, that's 100% increase, right? If they go from 6 to 8, that's only like 30% increase. It's not as big of a jump, right? And I actually doubt that they'll be at 8, to be quite honest. I know a lot of people are like, oh my God, they're going to hit double digits. The real estate market has already slowed so fucking much that this has already accomplished what it needed to accomplish. Whether or not goods and services are going to follow suit, because I think we're still seeing pretty high inflation on goods and services still. So I don't know if what they're going to do is they're going to continue to increase mortgage rates to curb inflation on goods and services, but it has been working for real estate. But like what I've been telling people is I just came from looking at a property and I told John to go ahead and make an offer on this property. We will not see pre-pandemic home pricing. That is done. You will not, again, who knows?
Meaning
right?
dropping as low
as what home values were pre-pandemic, I think is not going to happen. And why? Because I'm actively still searching and it's not happening. And people are still I don't know if it's a disconnect where sellers are unwilling to budge in respect to where interest rates are now so that we can get the same return as we once did, but it's not happening. And I can't see the real estate market taking much more of a hit, to be quite honest. I think that initial hit that we saw at the beginning of 2022 of this year, or I think at the end of, what would it be, at the end of the first quarter, right? Where rates started to increase like dramatically. That's over and done with. And I knew that investors, again, where are you going to put your money? Like, I think investors have had such a hard time to figure out, okay, well, I'm not going to put it in the stock market. I don't want to put it in GICs for fucking 3%. That's a joke. I'm not going to do private lending because I feel like that's risky, right? And I don't even know how to qualify properties properly for private lending, which is something that we can maybe get into in another podcast. But so where else am I going to put my money? I'm going to buy real estate, even if I have to put down 60, it's 40% on my real estate to get a 60-40 LTV. The return is still better than anything else that I can even conjure up, and safer and more stable, right? Because everybody needs a place to live, right? So for me, I think that rate now might be the last chance to get real estate at a decent price, because once this happens, where there, again, remember I told you that moment of stability in the market, once that spark happens, it's fucking up again. And I feel like it's happening right now.
Yeah. Even in just this past week or two, in terms of like the number of offers, because obviously there's a lot of different metrics you can look at when it comes to trying to check the temperature of a market, right? Yeah. Real large data that gets reported is always like 3 months late, right? Whereas there's little pieces of information that you can look at that kind of paint you a bigger picture of the market. And for example, the number of offers per house is a great indicator of that. Yeah. And what I'm seeing, for example, in the last 2 weeks, because I was just talking to Jamar over the weekend, who's a local real estate agent, he was saying how houses above the price point of like 600,000 are still sitting pretty stale. You might have one offer trickle in. Maybe it's after the offer date. Things above $1 million are just sitting. Whereas things from 300,000 to 600,000, you're seeing like double-digit offers again. He just bid on a property just yesterday or 2 days ago for one of his clients, and there was something like 20 offers on it. And it was like, and it was listed for $299, ended up selling for just around $450, and like you're having $150,000 over ask again, right? And like people are like, oh, we're never seeing that again. Lo and behold, 4 months later, we just needed a little bit of market stability, and people all of a sudden were now, because also in that price range, with how much rents have increased, the numbers are starting to work again compared to other Canadian assets. Of course. Compared to the US, no. But compared to other Canadian assets, it's actually starting to make sense again. Right? So now, lo and behold, you're having 20 offers, and many of them are coming from investors.
And that's what Scott said too. He's like, there's a lot of investors right now that want to buy. There's nothing available. Like fucking nothing. So that also might mean that people are holding their property until the next, market increase. Who knows? It doesn't really matter. What I've been telling people is you need to buy at every single point of the market and make the market work for you, not the market.
What
am I saying?
Make the market work for you. Don't like work for the market.
Exactly. Yes. Make the market work for you, not have you work. What? What did I say? What did you just say? That's what you just said is the right way, but I'm thinking in my head. I know what I want to say, but it's not coming out. I want to make the market. You want to make the market work for you. You don't want to work for the market.
There you go.
Yeah. Perfect. There we go.
Yeah.
That's it. So that's what we're seeing. And Scott was like, dude, you need to come up with another property for Coachwood Capital. He's like, these guys are hungry. So,
because I think also there's been enough, like you just mentioned kind of earlier in this clip, is that enough of the fear has dissipated enough that people are starting to ready to, whereas like you and I, even through all of the shitstorm that was going on, we're like, okay, we can see past it and we still want to be doing something. Yeah. But the only apprehension that we had was that Scott said something along the lines of about 3/4 of the investors are just no longer ready to pull the trigger right now. This is probably about a month to 2 months ago now that he had that conversation.
Maybe
even 3 months ago.
Yeah.
Whereas how quickly things shift, whereas they still had the same amount of capital, if not more than ever, sitting there ready to invest. It's just there's too much fear, right? Whereas now, like you just mentioned, that things have kind of settled, they're ready to pull the trigger again.
You can't wait. Like at the end of the day, remember those guys that were going to put in like all kinds of money, and then I had to cover what they were going to put in. They still haven't bought anything. It's been a year. So they went down to Florida because they're like, oh, we're going to do our own shit, right?
Yeah.
Okay. So they're going to do their own shit. It's been a fucking year. They still haven't bought shit. Yeah. So this is a problem that I see with a lot of, potential investors or potential real estate, entrepreneurs or whatever. They have all these dreams and all these hopes and everything, but they lack the ability to pull the trigger because, maybe for various, different reasons. They lack the information that they need to actually make an educated decision, or they just don't have the balls, maybe. But at the end of the day, it's the same fucking story all the time. When you wait, you get fucked. And people will lose so much more money not taking action, even if they take action at the wrong time. Get what I mean? It's always going to if you look at real estate on a 100-year trajectory, or what that graph looks like, it's not down. You're going to have down points on the graph, but that trajectory is constantly up, like up, steep. Yeah. It's a fucking steep incline. So.
And to clarify, that's not at the expense of just foregoing some of the fundamentals that you talk about all the time, right? You still have to be firm on those fundamentals, and if a property doesn't meet that criteria, that you just don't move forward on. Of course. But if you are consistent enough on looking for shit, putting in offers, eventually something will hit, and regardless of the market conditions.
There's really two things that people need to focus on, like really two things: fucking location and cash flow. No matter what market, it doesn't fucking matter. If you can get those two things, you're okay. You're golden. Because look at right now, okay? Even if I were to buy right now at the fucking, at interest, even if I buy in 2 months, say the rates go to fucking 10%, hypothetically, 12, doesn't fucking matter. 12%, doesn't matter. If the property still cash flows at 12% interest rate, Well, what the fuck does it matter? And like, here's the thing too. Think about what the rates are going to be for people in single family homes. You're not going to have single family homes come down enough where at a 2% interest rate, where the house was like, say, $500,000, to the point where like the house is now, $150,000 to support a 12% interest rate. You might see maybe like, $300,000. So the house is actually going to get more expensive.
Yeah.
So what's going to happen? You're going to have more renters. Okay. And what happens when shit gets more expensive? The rent goes up. So it doesn't fucking matter. As long as it cash flows and it's in a great location, it does not matter. If you can get those two things. Now here's the problem. It's hard to get those two things because you have to really understand real estate, right? You have to really underwrite. You have to really be smart and conservative really with your underwriting, okay? And you have to understand good locations. That doesn't necessarily mean, for you, or, what does a good location actually mean? And what kind of demographic
globally.
Or what kind of demographic are you actually going after in that location? And is it going to work, right? So there's a lot of things. It sounds easy, but why do people still miss? Because they suck. They don't actually understand, or they get blinded by napkin underwriting by the owners or the sellers, right, of the property, where they kind of believe the sellers. And I've seen that shit happen all the time, right, where the underwriting by the sellers is completely out to fucking lunch and it makes no sense, and they sell it on a newbie investor and they get hurt, right? Or a newbie investor doesn't actually understand the submarket of the area and thinks, oh, I'm just going to go buy something in Miami. Well, fucking Miami's a big place. There's a lot of shitty areas in Miami. Miami sounds great. Oh, I got a place in Miami, but there's a lot of fucking piece of shit places in Miami. Or, even Windsor. You see all kinds of people coming down from Toronto buying the shittiest stuff, and that's the stuff that people are getting hurt on in Windsor, is the shit stuff bought in the shit locations. Of course they're not working right now. Of course. And those aren't the properties that are getting multiple offers right now. Like I've been telling people, you buy for location and cash flow. Cash flow will save you during times like this, okay, number one. And then locations will also save you in times like this, especially when it comes time for increases in market conditions, because they are the first to start going up and they are the last to get hurt.
Right.
So that downtime in the market is so much less when you have good property and good locations.